In this video, we're going to catch up with the latest moves for gold and oil and the big levels to watch if you're trading it in the days ahead. Hello, I'm David Jones. This is the weekly video I do with Capital.com where we take a look at the price of oil and gold. Now, I did a webinar earlier this week and I said probably the two most interesting markets, pound US dollar and oil. And I think it really is. We're going to focus a lot on oil in this video, but we'll also take a look at gold, which hasn't changed much over the past week. But oil is interesting because we'd had this massive rally since last summer from $42 a barrel, got as high as $73 last month, and it's dropped off since. So the question is, has the trend changed? Putting some pressure on the price of oil this week. Every Wednesday we get US crude oil inventories. That's how much oil is stockpiled in the US. And it turns out this week there was more than expected. So it's a simple supply and demand thing. It appears to be a lot more oil stocks than the market was expecting. So that's pushed the price lower. Adding to this was talk that Saudi Arabia planned to increase oil production. So again, more oil would usually push the price down. So this has all put a bit of pressure on the price this week, but has it changed that big picture trend from last summer? Let's take a look at the chart. I think oil is one of the more interesting markets out there at the moment. Back in the summer of 2017, it was $42 a barrel. We've had this pretty significant rally, trading up above 73 in the third week of May. Since then, of course, you can see how much the price has come off. It's off by more than 10%. What's interesting, in the last few days, it's broken below that trend line. Now, trend lines don't work all the time, but this trend line has done a pretty good job of stopping any sell-offs in oil. So any weakness in oil back to the trend line has ended up being a buying opportunity. But you can see over the last few days, this hasn't been the case. And we've drifted below that trend line. So I think the question now is an obvious one. Does this mean the trend of oil is over? The uptrend is over, and we have to start looking for much lower prices as targets? Or is it just a false break? Maybe we're going to see the price recover, albeit at a slower rate. I think the big levels, the next big levels to watch on oil, I think the obvious one is the low from the 6th of April, around about $61.80. So in that sort of area. So if we did drift back to there, let's see what happens then. But for now, this break, it is a pretty significant one, because this trend line has done such a good job. But let's look at the oscillators. So not surprisingly, given the price has moved about $8, has slid off by $8, we've seen a big down move here. Not surprisingly, we've got things like the RSI, not quite oversold, but it is at its most extreme level for about 4 months. The MACD, you can see just how far dragged down the MACD has been. Again, back down to early February levels. But neither of these is really giving a buy signal yet. For the MACD, we need to see the crossover like we had here. And that did work pretty well. But at the moment, still getting dragged down. And the price of oil is still weak. Over the last few days, we have seen some support emerge at $64. But let's take a look at a shorter term chart to see if we can get some more clues. So we've got a 4-hour chart now. So each candlestick represents 4 hours worth of trade. And you can see that downtrend has been in place since the 22nd of May. It has made an attempt to break out of it, but $66 over the last 2 or 3 days or so has proved to be a barrier on the upside. We are seeing a bit of support ahead of 64. So I think for short-term traders, this is an obvious level to watch, this whole 64 to 66 range. If it breaks below 64, it does suggest that the next leg lower is starting again, continuing this downtrend. If it breaks above 66, then maybe we're managing to shake off some of this correction. So at the moment, it is almost right in the middle. It's trading at the time of recording $64.93. So it's something of a wait and see at the moment. But I suppose if we saw a breakthrough 66, the aggressive trade is to be a buyer with a stop under one of the more recent lows. But for now, at least, that trend is still down. But we've got some really key levels to watch over the next few days for the price of oil. So at the time of recording, it is still weak, but over the last couple of days, we have seen support come at $64 a barrel, but we've got resistance at 66. So I think we really need a breakout through one of these levels to give us the next sort of decent clue as to medium-term direction. Let's take a look at gold. We'll take a quick look at gold. Not much has happened over the last week. It's still trapped in this tight range. We're still not sure if that break below $1,300 was a valid break or a false one. So let's take a quick look at the gold chart. Here's the price of gold. Nothing has changed since we looked at this last time round. It's been a pretty dull market. I think it's a good lesson that sometimes there just aren't opportunities there. You know, sometimes markets are pretty flat, and this is the example at the moment for gold. We broke below the 1,300 support. Is it still a false break? We don't know yet. It traded as low as about 1282, but it can't get through on the upside 1307, 1308, and we're just trapped in this really tight range. So it's a bit like oil, actually, where we need just a breakout either way. So I think if we manage to rally through 1308, 1310, it adds to the argument that this was a false break below 1300, and we can start looking for a recovery. If it breaks below 1282, I think we have to start looking at more aggressive targets on the downside. But at the moment, it's something about just sit on your hands market. What do we have from the oscillators? Not too much. We nearly got oversold down here, but not quite on the RSI. The MACD has given a buy signal here. So that was, the third week of May. We did have a buy signal. We're just about holding on to it. But at the moment, it's fairly inconclusive. You know, we need to break out of one of these levels to give us the direction. You know, over the last couple of weeks, it's just been a bit of a dull market. So as I say, gold is pretty much as it was a week ago, but for me, oil remains a really interesting market to watch. Following the break of the trend line this week, a bit like gold, is it a false break? Are we going to see the market recover, but at a lower rate, or are we going to see a much deeper sell-off? I think we've got some key levels to watch there. So I think it does promise to be another interesting few days for the oil price. We'll start wrapping things up there. Every Wednesday, I do a live webinar with Capital.com, and we also do a Facebook live video at the same time, 12:30 Wednesday lunchtime UK time. So you can access it in both of those ways. For this video, if you have any questions or comments or a different view, leave us a message in the comments down below. If you like the video, click on the thumbs up, and to never miss out on what we produce. We normally upload a video a day. We look at foreign exchange, indices, cryptocurrencies, gold and oil like today, trading psychology. So to never miss out, just make sure you're subscribed by clicking the subscribe button, and the alarm bell notification means you get automatically notified every time we upload a new video. But for this week, from me, David Jones, and Capital.com, we'll leave it there, and I hope you have a good trading week.